Yeah, so the first thing you got to make sure is that clients are aware what that really means, right? Deferment is essentially you're saying that you can't make your payment. It's not just a free pass of, hey, we have a pandemic going on. We also had the same thing in South Florida when hurricanes come through. Sometimes your servicer or the company you're making payments to will offer deferments. But it's very critical that you understand what it is. And so what it means is, yes, you can, skip whatever amount of payments. Usually it's about three is kind of, sometimes they may allow for more at this point. But make sure that you're aware that, okay, if let's say you're skipping three payments, right? And your payment's $1,000 a month. Well, on the fourth payment, it's not just $1,000 and you continue on. At that point, all three of the past payments plus the new payment are due. And so, it's really just a relief effort for consumers, but be aware that it's not, it's not just, hey, you got to pass this month. It's a way for consumers to recover and then potentially make their payments in the future. And so where a lot of pitfalls happen is they don't, it's not understood correctly, and some of the servicers don't do a great job of explaining it. And so then when the fourth month or whatever month comes along and that surprise happens, then you're looking at other options that potentially could impact your credit profile, which is, you'll be asked to go to a loan modification or a payment plan, and that has potential impacts on your credit. And so we're talking about, the refinance option probably being very strong in the summer months, right? And potential relief coming there, and clients being able to take advantage of that. Well, if they've done this deferment option, if they haven't gotten caught up at that moment, then they're potentially, they wouldn't be eligible at that time. You can actually make yourself ineligible for about 12 months after that actual, modification.
Yeah. So guys, in other words, right? It's not the banks are not going to forgive your mortgage payments, right? They're going to defer them. And what they're doing now is they're moving them to the next month that's due. So in other words, if they forgive or defer 3 months, on that fourth month that everything comes back to, I guess, normal, if you want to say, all 4 months are due at once, right? So instead of having paid your mortgage every month, you now have to pay 4 mortgage payments at once.
Right.
Right. So not only will it have put a financial burden on you, it will also, or may also, damage your credit to the point where now you can't take advantage of the good interest rates because you're in deferment status, right? You're not caught up. And, if it's a mortgage of a couple of $1,000, you're looking at, $6,000, $7,000, $8,000 all at once, that it may be undoable for some people, especially people that, lost their job or may have been laid off temporarily. So, in my case, what I'm telling my clients is if you can make your payments, make them.
Yeah, and that's the simplicity of it. If you can make your payments, make them. If you can't make your payments, hey, take advantage and do whatever you got to do to make sure that you're staying safe, keeping the family in good standing. But just understand that may have a potential credit impact if you're unable to make the lump sum payment when that time comes.
Yeah,
if you can make your payments, the best method is just keep making the payments on time and be able to take advantage of potentially a lower rate in the future.
Exactly, and deferment is a much better option than missing a payment, right? So if you're thinking or you think you may not be able to make a payment, 100% you have to defer, right? It's a much better option at that point than to miss a mortgage payment. So missing the mortgage payment will essentially put you out of the refinance or a mortgage loan for at least 12 months.